Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, August the 22nd, the year 2018. Let's talk trading basics. Once again, I've been getting a lot of these emails inviting me to seminars and to download different indicators and, the ultimate this. But they're so far away from the basics. Why is that? And why do traders fall prey to these tactics? When if they would spend that time mastering the basics, they would see that they don't need any of that stuff. They really don't. The basics, it's all you need. Basic money and risk management. You don't need anything complicated. You can choose the amount either in dollars or percentage of your account that you're willing to lose. It's not magic. And then either deciding to set a stop loss at a certain place on the chart because it makes sense, and then determining your position size right here, or you like to use the same position size each time and you've got the same risk, so then you know where your stop loss is. I mean, it's just basic. And what could be more basic than trading a horizontal line? We place a line on the chart, and if it crosses going up, we buy. If it crosses going down, we sell. We apply our stop loss, our money and risk management, and then the market does the rest. Because there's nothing else we can do once we place the trade, right? That's it. I mean, that's the basics. And so we can see here that the dollar yen is sitting right here at the previous month's open line. It's already gone down, and it's come back up. So had you gone long at the previous month's low as it enters the monthly wick zone, you'd be up 29 pips. And then we can see right here on the weekly, it crossed below the weekly low and came back up. The open. And so now we're right here at we're just 3 pips below the weekly open. And speaking of the weekly open, we see we still have one gap here, the Aussie franc, one laggard. But you can see here, look at the movement off of the weekly open on some of these. We're talking hundreds of pips. And it's Wednesday. So you had Monday, Tuesday, Wednesday to trade. If you had picked the appropriate direction, you'd be up mega pips or 100 pips, right? And you can see right here, here's a daily open. And it went into the lower wick zone, exited, went into the upper wick zone, and exited. And you can see here we've got 3 or 4 pairs, 100 pips or better. The yen coming in at 59. And the euro yen coming in at 91. I am so tempted to switch. We had the euro AUD up here for some reason yesterday, but we can go back to the dollar yen. So once again, that simple basic horizontal line right here, we've got short. Okay? And you see the pivot point was below the open, so it actually covered the pivot before it got into the short zone. So there was your short, there was a winner, here was a long, that was a winner. Okay, here was a long, that should have been a winner, because if you went long and then price went up and came back right to the spot, once again, it should have been your key to exit. Okay, we had another entry trigger here, and these two were not standard buy zone trades because H1 would have been red, but had you jumped in, you can see once again right here, profit to be had. And there's the weekly open. And the rat zone, right now you see the red rats. We'll be looking for a red rat reversal. We're only 4 pips off the high. And you can see here, once again, we covered pivot and that weekly pivot right here at 110.71. Still looking to get that pivot on the week. And once again, we've covered all the pivots this week. And price action trading, 2 ball at the bottom, green at the line, 1 ball at the top, red at the line. See, there's profit to be had, red at that line. 1 ball at the bottom, green at the line, profit to be had. 3 ball at the top, red at the line. Right there, you're taking heat. But that could change. And you can see here, once again, using the basic horizontal line. No concepts applied at all. Just horizontal line. We're not talking about support resistance. We're not talking about supply demand. We're not talking about trend. None of those conceptual things, all of which are subject to debate and subject to change depending on the time frame. But you see these lines here, this is the previous daily session, not subject to change. Once they're in, they're in. They don't change. Doesn't matter the time frame. And the wick zone, once again, in the wick zone, out of the wick zone, in the wick zone, out of the wick zone, in the wick zone, the wick zone. Price doesn't like staying in the wick zone. And you can see we've got the holo, gave you an opportunity here to get back in. Price went up. Now we're in the upper holo zone looking for a reversal here at 110.54. Or we might just wait to the end of this hour because the candle could actually, the next hour could have a new highest open for the day. So that'll be a Randy real-time trade. And as you can see here, the inventory reduction bar, there was a trigger long there, a trigger short here. Here's a new short trigger line. There, it looks like it touched that line, so right now you'd be taking heat, but actually you should reverse because there is your long trigger here, and you can see prices moving up. It's up by about 3, maybe 4 pips at the moment. Okay, why did that happen? There we go. We're using the previous daily, weekly, monthly open, high, low lines. Once again, simple horizontal lines. And you can see the price action at the lines. And you can see right here, Randy real time, previous month's open, triggering a long. And as you can see, I just pulled up this portfolio just a little while ago. And when I say portfolio, if you save a bunch of charts like all these charts, you can save them to a portfolio. That's what it's called in MT4. So once again, I just went through all those charts showing you just the basics. We're going to use money management. We're going to use a horizontal line, and we're just going to go with the H1 candle color at the horizontal line. So you can see right here, there was about 1 pip to be had. You took that trade, it started to reverse. You can just bail, or you could stay in it and see, considering we've only got a 2.5 pip risk here, because if it triggers the other way, you could think of this as a compressed buy zone. We're just taking price action from the time we open this chart. This is our reference point. Price is either up or it's down. It's just real simple. You don't even have to be Einstein, but price is relative to when you start, as opposed to when the market opens or the week opens. But price is going to range away from this point, unless the market closes or it shuts down for some reason, like a corona mass ejection, something like that. It'd have to be pretty big. So there you have it, traders. The basics. It's real simple. So you probably get a few of those ads in your email inbox or spam box, promotion box, social box, whatever. But there's plenty of people want you to sign up for their lifetime subscriptions, pay hundreds if not thousands of dollars, or they want to give you this latest greatest indicator, but of course there's some string attached to it. Or they want you to attend their live webinar or their previously recorded webinar, or buy their book or their system or their EA. It just goes on and on. But no matter what, it's not what you trade, it's how you trade it. So forget about all that nonsense and just get out there and drain the banks. Use the basics.